I primarily focus on investing in index funds and ETFs. I mean, the theme and the motto of this channel is invest and chill. And that's my approach to investing on my brokerage account that I'm building out right here on this channel. It's also how I invest in my other brokerage accounts as well as my Roth 401k. But I also like investing in individual stocks. So in today's video, I'm going to be going over 5 individual stocks that I'm going to be keeping a close eye on for 2026. Full disclosure, I'm already investing in each one of the positions that I'm going to be going over in today's video. But the only caveat to that is I'm going to be hyper focusing on if we have a pullback in the market and where I can actually jump into these positions when and where it makes sense as we pull back. Now, if the market decides to go back up and hit all-time highs, I'll still be investing in these individual positions, but I'll just be dollar cost averaging in much smaller amounts over the course of 2026. The first stock on the list is Microsoft. Now, Microsoft is a behemoth and it's one of my favorite stocks to invest in. And I've been a player in this position for some time now. They recently signed a deal with OpenAI and they have been on the forefront of the AI arms race. And they've released products like Copilot and other AI related functionality that continues to cement their position at the top of the mountain. They also have the second largest public cloud offering with Microsoft Azure, and they are well positioned in the enterprise space. Add in the stickiness of products like Office 365, and you could quickly see how embedded this particular company is within our lives. So we have them in corporate America, we have them in our home lives, and we also have them in the education system. Just think about it for a moment. Whenever I was younger, right, and I'm probably dating myself a little bit, but I'm an 80s baby, grew up in the 90s, but back then you could actually go buy a Microsoft Office application and you owned it. There was nothing else that you needed to do. Now, a few years ago, they switched that model and they went to the subscription-based model. So if you want to buy that product for home use, you have to pay a subscription for that every single year in order to make sure that you get the latest and the greatest updates that they offer. So they've completely revamped that part of their business to turn it into a cash cow. They're sitting on tons of cash and their revenue is insane. All right, let's take a deeper dive and let's take a look at how Microsoft has been performing. I'm looking at the Microsoft numbers here on the Moomoo app. This is a new brokerage that I'm just starting to take a look at. I haven't started using them to invest yet. Just really starting to understand the look and the feel and the UI for the system. If you take a look at Microsoft on the day, you can see that we closed at $474.82. Now, we opened on the day at $480, so we saw a slight sell-off in the position today. And if we stick in column 1 and we take a look at the 52-week high, we see that it was $555.45. So we are almost $100 off from the all-time high of where Microsoft had traded at over the last rolling 12-month period. So what that tells me is that we still have some room to ride this back up to the upside. So I'm going to be investing a little bit more in this position in 2026. And then if you take a look below that, you'll see the 52-week low of $344.79. Now that's the number that I'm watching extremely closely. If we get a chance to move back down near that 52-week low, then that's my load the boat opportunity to where I can invest as much as I can leave into this position in order to ride the wave. I mean, we already see that it hit $555. And my bet and my guess is that we will see that again at some point. Will it be 2026? Who knows? It could be 2027. I'm not really concerned because, again, whenever I'm investing in the market, I'm investing for the long term. We're talking 10 plus years here. Let's take a quick look at the annual income statements for Microsoft since 2021. Now, if you're looking to research a company to invest in, you'll want to do a little bit more research than this, but we're just doing very high level overview of one of the reasons of why I like this position. So you'll take a look at the revenue here, up almost 15%. Operating expenses are up right around 6%. Net income of $101.8 billion. That's a lot of income. And then if you take a look right below that, you'll see that the net profit margin $36.15 billion. So they're sitting on a treasure chest of money. And then if we take a look at the EBITDA, which is earnings before interest, taxes, depreciation, and amortization, they're at $156.53 billion, and they have an effective tax rate of 17.63. So if you take a look at this from an annual perspective since 2021, you can see one of the reasons why I really like investing in Microsoft. The next stock that I'm going to be watching in 2026 is Nvidia. Now, Nvidia is likely on most people's watch list, and there's reasons for that. I mean, they are the top dog in the GPU space. They have a large presence in the gaming industry, and there was just a deal that allowed them to sell their GPUs and chips in China. Nvidia has pulled back from their 52-week high, and they are now at a price point to where we really need to start taking a serious look of starting to add this to our portfolio. So let's take a quick look at how Nvidia has been performing. So today we opened at $177.93 and we closed at $176.29. Now, if you look right below that, in the very first column, you'll see that we had a 52-week high on Nvidia of $212.19. So we have pulled back off that 52-week high. And when that happens, especially when it comes to individual stocks, that's whenever my ears and my eyes start to open and I'm starting to really pay attention to where these opportunities are. Now, if you look right below that, we have a 52-week low of $86.62. Now, that was the time to buy. And unfortunately, I wasn't able to load up in this position as much as I really wanted to whenever it hit that 52-week low. I mean, we got down there, we bounced really quickly, and the market recovered after the Trump administration took the tariffs off, and it caused the market to swing immediately back up to the upside. So we had some opportunity there. We didn't go all in, and we missed that move down to that 52-week low. But I'm going to be paying very close attention to how this stock moves in 2026. If we see a little bit more of a pullback, especially into that 160s, the 150 range, that's going to be an opportunity zone for me to average into this position whenever it pulls back. Now we're taking a look at Nvidia's income statements on an annual basis. This is a very high level look, just like before with Microsoft. And if we take a look at the price change from 2024 to 2025, Nvidia's revenue is up over 114%, which is insane. Their operating expenses are up 44.81%, so they're spending a lot more money. Their net income is up 144%, which is insane, almost 145%. Their net profit margin is up little over 14%, so $55.85 billion in net profit. Their EBITDA is $83.32 billion, which represents a 141% increase from 2024. So as you start to take a look at some of these numbers, you can see why Nvidia is on most people's watch list. The third stock that I'm going to be keeping an eye on in 2026 is Eli Lilly. Eli Lilly is a leader in the weight loss GLP-1 space. They are a leader in the diabetes and insulin space, and they are pouring tons of money into new manufacturing facilities around the world. They are one of the giants in the pharmaceutical industry. And unfortunately, especially here in the West, diabetes is here to stay. It's not going anywhere. And Eli Lilly will continue to rake in profits because we're just unhealthy as a people. It's just a fact. Let's take a look and see how Lilly has been performing. So on the day, they opened up at $1,032.55 and they closed at $1,062.19. If we stay in that very first column there, we can see that there was a 52-week high of $1,111.99. So we're about $100 off the 52-week high from Lilly as well. Now, this one has been surging over the past month or so. And if we take a look at the 52-week low, it's at $623.78. So I'm not 100% certain if Lilly will get back down and touch that 52-week low. But if we see some pullback, especially in that $700 range, that's the opportunity zone to actually load up. Now, I know that when we see stocks that have these price tags on them, some people get a little concerned and they start to ask questions about, I can't afford to buy a share of that. Well, that's why we buy fractional shares. So any way that we can invest into these positions, $5, $10, $50, $100 at a time, that's the process that we're going to be taking to ensure that we build our wealth over time. All right, so we're going to take a look at Lilly's income statement on an annual basis from 2020 through 2024. Now, if we take a look at the very top here, we're going to see the year over year change, and that's for 2023 to 2024. We see a 32% increase in revenue. Right below that, we see a 17.64% increase in operating expenses. And then if we take a look at the net income, up over 100%, so 102%. From 2023 to 2024. And then if we take a look at the net profit margins, it's up over 50%. So it's 53% from 2003 to 2024. And if we look at the EBITDA, it's 19.27 billion, which represents 56% increase from 2023. Again, this is another very strong company that's a blue chip that I'm watching for 2026 and beyond. The fourth company that I'm going to be looking to invest in 2026 is Meta. Now, to be completely honest with you, a couple years ago, I was ready to write Meta off. The stock was down and users were flocking from their systems and they were going to places like TikTok. But there has been a resurgence with Meta. I mean, they have WhatsApp, they have Facebook, and they have Instagram. No matter how you feel about any of those three platforms, they are still in high demand, and there are a lot of people that are still using those particular social media spaces. And then you add to the fact that they are heavy investors in the AI space. I mean, if you go into your Facebook account and you type something in, and even if you don't mean to do it, it seems like they have an AI functionality that starts bugging you and asking you questions. I guess that's just the new wave. AI is the new wave. It's here to stay. I don't know how much of an impact it's going to have for Facebook, but they're a heavy investor in the AI space. And then lastly, they are very active in the virtual space. You've got the Meta glasses. Everybody loves the Meta glasses. I haven't tried them out yet. I want to, but they are heavy investors in that space as well. Let's take a look at how Meta has been performing. So they opened on the day at $645.70. And then we had a close today of $647.51. So if we stay in that furthest left column there and we take a look at the 52-week high, $796.25. So close to being an $800 position. Again, I thought they were dead, but they fooled me, right? So I'm really a believer in Meta now, and I think there's room to move back to the upside in this position. If we take a look at the 52-week low, we have $479.80. All right, so if we take a quick look at their annual income statement here. So for 2023 to 2024, we saw a 21.94% increase in revenue. We saw a 10.46% increase in operating expenses. We saw a 59.5% increase in net income, and the profit margin is up 30.81%. So that's still a really good amount of profit that they're up over that 1 year period. And then they have an EBITDA of $83.72 billion, which represents a 39.1% increase. The fifth company that I'm keeping an extremely close eye on for 2026 and beyond is CoreWeave. Now, CoreWeave is a stock that showed up on my radar several months ago. I researched it for a while and I have a very small position in it right now. It has been pulling back some, but I really like some of the things that I'm seeing and I'm reading about CoreWeave. So CoreWeave specializes in GPU infrastructure. So a lot of those companies like Nvidia, Google, OpenAI, they rely on CoreWeave for the infrastructure needed to run their GPUs. So there's absolutely room for them to play in that AI space. They also have tons of multi-year contracts that are starting to stack up across this space, and they're quickly becoming a company that I really want to try to get in on the ground floor. Now, add to the fact that Nvidia is a big time partner with this organization, that's enough for me to give it a little bit of attention. All right, now we're taking a look at CoreWeave, and we can see they opened on the day at $79.33, and they closed at $72.35. So if we stay in the far left column there, we can see they had a 52-week high of $187. So they're down again almost $100 per share during this latest downturn in the market. And that gives us an opportunity to potentially ride this back up to the 52-week high and beyond. And if we take a look at the 52-week low, you'll see that it's $33.51. Will it make it back down to the 52-week low? I'm not certain that it will. This one's a little bit unknown because it's a little bit of a newer player in this space. But if it gets down into that $50 range, 55, 45, for me, that's a buy zone. That's a zone to where I'm going to be seriously considering adding larger amounts of money to this play, with the expectation that it could be a 2-year play in order for this to bounce back and start to move back to the upside. But again, like I always say, I'm investing money that I plan to keep into the market long term. I'm not a day trader. I'm not a swing trader. I'm a long-term investor. All right, so let's take a look at the income statement for CoreWeave from an annual basis. And as you can see, like I mentioned, it was fairly newer company out here on the block here. So we're going to go through some of their details here. So their revenue from 2023 to 2024 is up 736%. Insane. So if we were in this position during the early time, we would have been able to make a lot of money on this play. But unfortunately, I wasn't aware of CoreWeave back then, but I am now. And as it's pulling back, this could be my opportunity to get in to ride the wave back up. So if we look at the operating expenses, it's up 528.6%, which is to be expected from a newer company that is now publicly traded. If we take a look at the net income, it is down 45.42%. So spending a lot of money to be in the game here. And then they have a net profit margin of negative $45.08 billion. But it has increased 82%. So this is a longer term play, right? This isn't something like a Microsoft or Nvidia or a Meta that I'm looking to invest in that's a blue chip. I'm rolling the dice a little bit on CoreWeave and banking on the fact that their GPU infrastructure that they provide is going to stick. Then if we take a look at their EBITDA of 1.19 billion, which is an increase of 1,238%. I'm looking to invest in CoreWeave a little early, albeit not as early as some of the others that were able to capture some of that move to the upside. But with Nvidia backing them and partnering with them and having a ton of contracts in the pipeline, I'm going to view this as a strategic risk where I'm going to allocate a small percentage of my investment to on a weekly or a monthly basis. All right, so what do you guys think about the 5 positions that I'm going to be keeping an eye on in 2026? Do you agree? Do you disagree? What are you watching? I'd be curious to know what you guys like and what you're seeing and looking at for 2026 and beyond.